Hey guys, JC Peretz here, founder of AllStarCharts.com, and I am back finally with Sean McLaughlin back from Asia here in the lovely United States of America. How's it feel to be back, my friend?
It feels great, man. I'm back in Colorado where there's no humidity, and that's a wonderful thing.
Yeah, I believe that. You were wearing long sleeves today, I believe, which
Ooh,
is
I,
something you definitely were not doing in Southeast Asia in the summertime.
I woke up this morning and there was a chill in the air. I was a little chilly. It was so great, so great.
Let me ask you this: who sweat more, Steve Straza or Giancarlo?
Ooh, that's a tough one. I don't know, man.
I
They
bring the
were
tough
both.
questions here.
I mean, I think when both were sweating at the same time, Straza was probably sweating more, but Giancarlo was probably in a full sweat 24 hours a day, and that's the difference. So maybe
You handled it
Giancarlo.
pretty well. The guy from Colorado actually handled it the best, is my understanding.
I'm shocked by it. I really thought Giancarlo's from Puerto Rico and Straza lives in Key West. I figured they could handle this stuff better than me, but that was not the case.
Listen, good on you. So we're back, and I'm asking, Sean, what are you thinking here in terms of the market volatility in general? How are you approaching equities? And your answer was, keep it simple. Volatility is low. Just buy calls, unless it's a high price stock. Then you can help pay for it by selling something else, selling some calls. But generally speaking, low volatility, keep it simple, buy calls, go out as far as you possibly can. That's the strategy.
Yeah, I mean, I think so. Until the market tells us differently, we are in a continually declining volatility environment. I mean, yes, broader stock market has pulled back a little bit over the past week or so, and that has scared people a little bit. But I mean, man, we're still way off where options premiums were even just 6 months ago. So if you're bullish, and we have a lot of stocks that we are bullish on here, if it makes sense, I mean, just buying a simple call is the best way to express that using options. I mean, look, I know a lot of people come to us because they want to learn about options, they want to learn about complex option strategies, and they want to get the most out of what options can do, and that's great. However, I'm not ashamed to admit it, JC, and you know this. My favorite options trade in the world is just to buy calls on a stock that's making new all-time highs. That's my favorite trade. Why overthink it? Get the leverage,
Well, no,
define
hold
your
on.
risk.
Hold on.
It's all
You're
good.
oversimplifying it, because why overthink it? You were literally thinking through the process. You're like, well, volatility's low, so I'm going to incorporate strategies that are good for low volatility environments. You've already thought about that. If we were in a high volatility environment, you're not going to be putting those trades on.
You are correct. You are
You're
correct.
like oversimplifying it. You're like, oh, keep it simple. Don't overthink it. You've already thought through this. So you have to first identify what type of market environment we're in, and then decide what are the best tools and strategies for that particular market environment. Your high volatility strategies right now in the options market are not going to do very well, because we're not in a high volatility environment. We're in a low volatility environment. So like you said, keep it simple, just buy calls. I find it interesting. Last week you came in looking to buy energy, put on a trade on the Pioneer. I don't want to digress, but you came in from Asia looking to buy energy, and then this morning you're coming in saying, JC, I like this marathon chart. Sounds to me like you thought this was a pretty job. Somebody did a nice job with this chart here, huh?
I love the chart, but more importantly, I love, and we've been talking, Straz and I have been talking about this over the last few weeks, and then you brought it up on the morning show this morning about how if you think Bitcoin is going higher, yeah, you could go buy Bitcoin, but you said it this morning, if you buy Bitcoin, you'll underperform. Why not get into some of these leveraged stock vehicles that are going to have a much bigger move, at least in percentage terms, if Bitcoin does what we think it's going to do? And I love that idea. And I love that these are cheap stocks and we could get in pretty affordably with options. And the upside on these things was pretty tremendous. I mean,
So cheap in terms of actual price on the y-axis, making them inexpensive options, and also cheap. These are $2-3 billion companies. These are next to nothing, and you're getting 3-to-1, 4-to-1 leverage on the moves of Bitcoin. So if Bitcoin's up 1% or 2, these things are going to be up 6, 7.
right. And on top
By
of
the way, in
that,
both, when Bitcoin's down, they also fall. Just for the record.
true. But we've got our risk is defined, right? Can't lose more than we paid in the calls. And we are jumping in at a time when the implied volatility in these options is the lowest it's been all year. So that provides us a little bit of cushion. And here's an interesting thing about stocks like this, and this is maybe a little bit unique to these Bitcoin miners, is that if these stocks start ripping higher, generally speaking, a normal stock like your normal big cap stock, if the stock's making new all-time highs, that's usually going to drive options premiums lower. But in stocks like these, where they're small capped, kind of a new sexy industry, you got the meme players like to get into these types of stocks. If these stocks start ripping, implied volatilities in these options will likely actually rise, which will only add more profits to our trade if and when we get it right. So there's a lot of reasons I like these trades.
Yeah, I really like the how well the risk is defined. You know, you kind of potentially had that shakeout over the last few days, shake out the weak hands, if you will. You know, looking for the diamond hands. That's what the kids call it, Sean. They call it diamond hands. Diamond hands. So the diamond hand, so, listen, 17 and a half on the Riot, 16 and a half on the Mara, 16 really, pick your poison. It's more of a range. And by the way, even internally, we think that these things are attractive, particularly above these levels. We're all looking to play it in different ways. Sean, why don't you walk through this? So you're looking at the 16 calls, right?
Yeah, so I kind of departed from my normal strategy. When I'm buying long calls, I tend to like to buy the 25 delta calls because I feel like that gives me the nice mix between leverage when I'm right and affordability, and minimum risk if I'm wrong. But in this case, because it's a cheaper stock, the stock has about a 16 handle on it. I looked out the January options and I was looking at the 16 strike calls, and I was able to get them for just around $4 a contract. I paid a little bit more. They're cheaper now. But I liked that because if this thing's going to rip, I think it's going to rip from here. I think we all agree that if it's going to rip, it's going to start from here. And I like being in the money in my calls as soon as possible. But at the end of the day, JC, it really just came down to a gut feel. I was looking at the options chain, and the 25 delta strikes were so far away. I think they were at like the 30 strike. And I was like, yeah, I think it can get the 30, but I don't want to be positioned in 30 options, at least right now.
So these are the January 20 calls you paid $4 for. Do I have that right? Excuse me, the January 16 calls you paid $4 for, right?
That I actually paid 420 for it. You could buy them now. I'm looking at them right now. You could probably buy them for 395. So
420. Is that a Colorado Bitcoin joke?
Just a coincidence, my friend. Get your head.
I doubt it. So, this was, what I was just saying before, how we don't necessarily even agree on the best way to profit from it, simply because we have different objectives. Even within our own team, Yumi and Straza are doing different things. You like the 16 calls. Straza's in like the 18s, 19s. He's got 20s. Like he's kind of what did you call it? What strategy?
Straza took out his buckshot gun.
Buckshot strategy.
And just like took out, all these random months and expirations. I don't know what his strategy is on that. I think he's just, I don't know.
I see a lot of open interest on the 30 calls, January 30. So I jumped in that one. I'm going way out on the limb. I'm gonna have some size on this thing. If we can start holding above 16, I'm gonna be in some serious size on this trade. So I like the 30s. So same expiration, Sean, like in the 16s. I'm going way out on the 30s, $1.40, $1.50. Too aggressive, Sean, or you think that's okay?
No, not too aggressive. Look, we talk about this all the time. The thing that's both fascinating and frustrating for options traders is that there's no one right way to do anything. There's like, just because you're doing it your way and I'm doing it my way doesn't make one of us wrong. We're just expressing our thesis in different ways, and we're going to both profit in different ways if this thing gets going. You're going to get a higher percentage return. Let's say Mara goes to $40 over the next 3, 4, or 5 months. You're going to get a much higher percentage term than I am, or percentage return than I am. But I'm going to have a more, higher probability of success, but I took less risk. You're taking
if
more risk.
This thing gets into the 40s, I'm looking at a 20 bagger.
You'll be crowing about it for sure. But hey, look, My plan on this one, and this is
Well, hold
obviously
on. What am I going to be doing? I'm going to be crowing.
you're gonna be pounding your chest,
Is that what I'm going to be doing? That's what that's called, crowing.
Sorry.
I don't
Sometimes
know.
that's what some people call it.
Is it? No, I'm asking. I don't know. This is a new one to me. I don't know. Crowing. I'm not a chest pounder. I'm not one of those. But man, if I get a 20 bagger here, I'm gonna be sitting nice, man. I'm gonna be sitting
Yeah.
real nice. So,
So look, my plan is different from your plan, but going forward, let's talk about risk management and where we're taking profits.
yeah,
So risk management for purposes, you're leaning against a 16 level. I'm
I
giving it
am.
a little bit more room. I'm giving it down to 15. 15 kind of feels like a good spot because that was where the highs were back in September, I believe it was. It doesn't show up very well on that chart you got there. Why is that?
No, but I get it. Yeah.
Your chart looks different than mine. I'm looking at a chart here, and 15 was where we had some little pop-ups in September and November last year, and that's kind of where it hit resistance. So now I'm going to lean against 15 to be support. And so if it's below 15, trade's invalid, I'm out. Meanwhile, if this thing starts motoring like we think it will, and it breaks above to 25, I'm going to take some of my position off, depending on, it'll depend how much depending on when it happens. But my plan is when we get to 25, I'll sell enough contracts to at least pay me back my original investment. In the past we've talked about when the options double, I sell half and do that. I'm giving this more room so that, if I bought 10 contracts, maybe I only have to sell 2 of them to get back to whole. And then I have a much bigger win if this thing rips. And I'm going to hold it to 30, 31, which is where the team has a price target on this stock if it really gets going. And if we get to 31, I'm out. I'm going to take the whole thing off and celebrate my large win.
Yeah, and this is really a leverage play on Bitcoin. Try to get going this morning, back down below those levels. I really want to see this thing stick 30 on the Bitcoin. And, if that's the case, like I said before, if Bitcoin prices are going up, owning Bitcoin is a great way to underperform in that environment. You're getting a much better bang for your buck, not just on the beta, but in terms of how much you're paying. You're dropping 30 large on one Bitcoin. You're paying $16 for one of these on an options contract. You're only paying a few bucks. I really like the risk versus reward. If you can manage risk responsibly, have at it. One of the things I like about the simplicity of buying calls is that there's already risk management in place in the trade. You can't lose more than you put in. And on top of that, you can add an additional layer of risk management. Sean was talking about 15 to the downside. If it breaks that, all bets are off. I'm more of a 16 kind of guy. Like I started nibbling a little bit, but I'll have real size on above 16. That's how I'm looking at it. I don't disagree with that 15, Sean, but I really want to be aggressive above 16 and maybe even adding to those positions above 20, to be honest.
Yeah, no, I'm with you on that. I did not put that in my blog post about this trade, but I too personally, if we break above 20, especially if we do it, over the next month or so, I might consider adding to that position too. That would be a great spot to do it. And we'll have some baked in profits at that point, so we'll be feeling good about it.
All right, so Sean bought the January 16 calls for $4.20. These are the Marathon Digital, MARA, $3 billion capital market stock. It's a Bitcoin miner, supposedly. Marathon Digital. I like it, Sean. Make sure guys go to the blog for all the details on that. We talked about the risk management. We talked about the upside. I'm nibbling already on the 30 calls, January 30s. We had those on the way up back in June. They treated me well. Ton of open interest there, which is also interesting, right, Sean? When there's a ton of open interest at a double from here, that's something special. So I like how we're sort of adapting our strategy to the current market environment, the situation with Bitcoin, where volatility stands, and combining all of that into a very simple trade. By the way, in other environments, the trades aren't that simple. They're actually more complicated. Some have up to 4 legs, much more complicated in other types of environments. Not this one. So I like it, Shawnee. Welcome back to the United States, by the way.
Great to be back, man. In Buffalo last week, I was there for 6 days. That's the longest I've been in any one place, JC, since the end of June. So it felt good. And now I'm here for a month.
Well, listen, I'm glad that you're home. Good to be home. Home sweet home. Probably feels good to sleep in your own bed. So I'm happy for you, Sean. All right, guys, go get them. Manage risk responsibly, or YOLO responsibly, however you roll. Adios.
See ya.
However you roll.